Manisha, well, let's focus on a few stocks then that are moving around. We have Abhishek, Mangalam, as well as Sonal there joining in to tell us about all the top movers at around 10 a.m. Abhishek, you go first. SBI Card, stock under pressure.
Well, for SBI Card, if you take a look from Q1 FY21 to Q2 FY23, the revolver rate has declined massively from 45% to 24%. What this means is that loans which get overdue past your due dates, that rate is declining. So the interest earning capacity of a lender actually declines if this rate comes down. So we are seeing that impact on the yield as well, which has declined from 22.8% in Q1 FY21 to now down to 15.1%, and that has also taken a toll on the net interest margin, which is down from 19.2% in Q1 FY21 to right now about 12.3%. So credit cost has remained elevated in Q2 FY23 at 5.6% when compared to 5% in the previous quarter. The asset quality has remained stable. It has improved by 10 basis points on a sequential basis to 2.14%. Total income is up 28% YOY and about close to 6% sequentially. However, the PAT has come in at 526 crore when Motilal Oswal estimate was around 590 crores. So brokerages have cut EPS estimate anywhere between 1% to 17% for FY23 and between 2% to 14% for FY24. The higher than expected credit cost is a negative surprise. The revolver book decline is also a negative surprise, and JP Morgan has downgraded the stock to neutral, and they have cut the target price by 24%. So target price now ranges from as low as 700 per share to as high as 1,175 per share. Back to you.
Okay, thanks a lot for that. That's an SBI Card. Tata Chemicals is coming under some profit taking right now. Sonal is here to tell us why. Sonal, over to you.
Thanks a lot for that. Well, for Tata Chemicals, what's happening is that margins expanded, but they were slightly lower than what the street was working with. Overall revenue growth was strong, up 40%. EBITDA was up 84%, but margins, they expanded just 400 basis points versus an expectation of an 800 basis points increase, and that is where a bit of disappointment has come in. Profits, however, were up 176%, aided by higher other income and lower expenditure as well. If we talk about their two major segments, the basic chemical segment, where revenues grew 45% on a YY basis, EBIT margins were up 740 basis points on a YY basis, but they declined 150 basis points on a quarter-on-quarter basis. But in the specialty chemicals segment, revenues were up 27% and EBIT margins increased both on a YY and on a quarter-on-quarter basis. The worry possibly could be that soda ash realizations have declined quarter-on-quarter basis, but do remember in the quarter gone by, they were at a record high level. So this decline is something that the street is not liking right now. Company says there were higher contribution margins in overseas units due to improved realizations. Gas, coal and freight costs, they are still at higher levels, but they are stabilizing. This was one of the biggest worry for investors for Tata Chemicals as well. Soda ash prices continue to remain robust across geographies according to the company, but slight margin miss, so to say, is something that is impacting the stock price, and of course it is seeing some profit taking as well. We have the conference call at 12 p.m. today, and we'll hear out the management commentary there as well.
Okay, point taken, Sonal. To be fair, it's a 26% gain year on year or year to date. Both are, more or less same now, and therefore I guess a bit of taking of profit is in order. Let's get to the one where we were not prepared for this kind of fall. We know that the end of lock-in would bring in some sellers or expected selling into the market, but Nykaa one didn't expect, Mangalam, now at the IPO price or lower.
It's lower than the IPO price. In fact, it was one of the few new age platform stocks which was holding above the IPO price for the longest time, Lata. And now it's down, 62% from its post-listing high. And as we speak, it's a fresh low on this stock. It's down almost 14% from its IPO price of 11.25 as well. Remember, the company listed exactly a year ago on November 10th, 2021. So November 10, 2022 is where the pre-IPO shareholders lock-in ends. Remember, post-LIC, this number was reduced to 6 months. So that is something we'll be watching out for. Why? Because as per their red herring prospectus, nearly 98.5% of their equity, which is close to 47 crore shares, was allotted pre-IPO, and of which the promoters holding is about 52%. So if you take the promoters holding off, you still have 46% equity, which was allotted to employees as well as institutions, which are now eligible for sale. So that happens on November 10th. So those floodgates of supply likely to open, and that's worrying the stock. Apart from that, there was a change in the management, a key management personnel yesterday, where Rajesh Uppalapati, who has been appointed as the CTO, in place of Sanjay Suri. Now, Sanjay Suri has been with the company since 2016, so it's an old hand which is going out. But nevertheless, Rajesh Uppalapati has been with Amazon for 20 years, so this should not be looked at as a big change as far as the caliber of the appointment is concerned. And the third one, most important one, their results are next week on November 1st itself. We've heard from delivery that second quarter wasn't much changed from the first quarter itself, and all the growth that is expected will come by in the third quarter itself. So maybe the street will give a pass to the second quarter and await the flows coming by for the company on November 10th, and await results for the third quarter before taking a fresh look into Nykaa.
Okay, just keep in mind also, before Sanjay Suri, Reena Chhabra, who was the head of the Nykaa private label division, also resigned in the month of August. So a couple of top-level resignations doesn't bode too well for the company either. But a lot of pressure in Nykaa, down 53% this year. But Ekta's with us. She'll tell us about why she's watching Sun Pharma this morning. Ekta, over to you.
Well, yes, Sun Pharma is in focus because it is reacting to Taro's numbers, which is basically their US arm that released its numbers late last night. So the sales have been absolutely flat on a year-on-year basis. It's come in at around $130.5 million. And what's disappointing is that they've reported an operating loss of around $6.81 million, which compares to a profit of $24.4 million and versus a profit in terms of operations last quarter as well. There's a net loss which is incurred by the company at around $2.8 million, again versus a profit of over $20 million same time last year. Now, one of the reasons for this is because of a continued price decline that the company has mentioned, particularly in the US generic business that they are facing, and that has impacted the operating performance of the company this time round. Remember that Sun Pharma comes out with its numbers on the 1st of November. While it has a very strong specialty business in the US, the street might be a little skeptical in terms of the margins, and that the fact that Taro has now reported an operating loss in terms of its performance, that could probably scale off a couple of percentage points when it comes to Sun Pharma reporting their numbers on the 1st of November. So that seems to be worrying the street at this point.
Okay, so Sun Pharma a bit on the back foot even before it announced its numbers because of Taro. Thank you very much, Ekta, for joining us with those details. So those were some of the stocks that are